welcome to the Deep Dive, your shortcut to, well, really understanding what's going on. Today, we're diving deep into crypto. It's buzzing, it's complex, you've seen the headlines, felt the swings probably. But what's actually happening behind all that noise? So, our mission here is simple. Unpack the latest market moves, the big developments, and crucially, the regulatory winds shaping crypto in July 2025. We've gathered the latest intel, and by the end of this, you could have a much clearer picture of what's really driving things, prepare you for what's next.
Yeah, and that clarity is so important right now because you look at the surface, you see volatility, looks like a roller coaster, but our sources, they show there's a much deeper story playing out this month. We'll try and connect those dots for you, highlight the shifts that really matter.
Okay, let's get into it then. We promised to go beyond just the headlines. So let's start with the market's pulse right now. Our sources point to this interesting mix, right? Volatility, definitely, but also this undercurrent of optimism. I mean, the total crypto market cap dropped, but 3.2% the last day, suggests caution. But how do these two things, this caution and the long-term optimism, how do they actually coexist? What's that telling us?
It tells us quite a bit, actually. It suggests the market is maturing, maybe. While, yes, short-term traders are cautious, you see that in the daily moves, but the long-term view, especially for Bitcoin and some specific altcoins, it's still looking pretty strong. It seems like the serious long-term money is looking past these daily wobbles. They're focused on, adoption, the tech build-out.
Right. Okay, let's zoom in on Bitcoin then. It's trading just over $106,000.
Yeah.
Down a bit, about 1% today. But here's where it gets really interesting, I thought. Bitwise, the asset manager. They're predicting Bitcoin could jump like 30% in July, maybe hit $136,000. Wow. That's a big call when things feel choppy. What's driving that bullishness? Is it really new money coming in, these institutions?
Yeah.
Or just shuffling funds around?
That's a good question. It seems to be a mix, but our sources do suggest we are seeing genuinely new institutional capital and growing interest from sovereign wealth funds, too. That's significant. So it's not just reallocation, it's a broadening base. And the central bank rate cuts, they help, too. They just, boost liquidity for risk assets generally.
Okay.
Crypto benefits from that risk-on feeling, even with its whole inflation hedge story. And the technicals, they kind of back this up. Bitcoin's consolidating, right? Strong support around $102,000, resistance near $110,000. That shows a solid base.
And what about Ethereum? BTC's counterpart, often compared. Our sources also highlighted a lot of development activity happening there. Layer 2 scaling, this real-world asset stuff. RWA tokenization. You raised a good point earlier. How much of ETH's current price is reflecting that innovation versus just, speculative trading? How do we even gauge that? The innovation premium.
Yeah, that's the million-dollar question, isn't it? Or maybe billion-dollar now. Quantifying it exactly is tough, really tough. But we can look at clues like developer activity, the amount of value locked in DeFi on Ethereum, active addresses, things like that. The work on layer 2s that tackle scalability makes it more usable. And RWAs bring, actual real-world value onto the chain. Those are fundamental drivers.
Right.
So while there's always speculation, the underlying tech and the stuff being built suggest a growing chunk of its value is tied to, let's say, its actual function and potential, not just hype.
Okay, moving beyond the two giants then. Because our sources show lots happening in the wider crypto world too. It's a bit of a mixed bag for altcoins and meme coins, it seems. Like SREP, a DeFi token apparently showing strength, could hit new highs. But meme coins, they exploded earlier this year, but now, mixed performance, some sharp drops. What does that divergence tell us? Is the market growing up a bit?
I think it really does illustrate crypto kind of coming of age, yeah. SREP's strength, that suggests the market's starting to value, actual utility, sustainable DeFi models, fundamentals. And the meme coin situation, the corrections, the consolidation, that feels like a natural shift. Investors may be getting a bit more discerning, looking beyond just the hype. It's not just diversification. It feels like the market's trying to find its utilitarian compass, maybe.
This RWA thing, real-world assets, connecting physical stuff to the blockchain.
Yeah.
Feels like a pretty big deal. Sources mention Ondo Finance, Centrifuge, building ways to tokenize real estate, bonds, attracting retail and institutional folks. It sounds really transformative. But what are the real hurdles? Is it tech integration or is it more about getting traditional finance to, actually buy into it and change how they operate?
It's definitely both. But I'd say the biggest hurdles right now are probably on the traditional finance side. Things like legal frameworks that fit, custody solutions for these new tokenized assets, and just the sheer inertia, Old systems are hard to change.
Sure.
Technically, the blockchain side is, well, mostly ready. The real shift happens when the big banks and institutions fully embrace the efficiency, the transparency that tokenization offers.
Right.
Looking bigger picture, yeah, this trend should accelerate as the rules get clearer and more TradFi players dip their toes in, then maybe jump in. It really bridges that gap between old finance and DeFi, opens up liquidity, access.
And we're seeing related moves on the exchanges too, right? Reflecting these shifts. Femex delisting a couple of pairs, Miniki and GIBLI citing low liquidity. That makes sense. Meanwhile, Binance is expanding, adding pairs, boosting its Earn program. Coinbase looking at new staking options in Europe. What do these moves signal about how the big players are adapting?
They're definitely strategic moves. Femex cutting unpopular pairs, that's just market efficiency, right? Reallocating resources.
Yeah.
But Binance and Coinbase, they're clearly positioning themselves. They want those users looking for yield, and they're looking at regions with more favorable or clearer regulations, like Coinbase focusing on Europe that's almost certainly tied to MiCA, the new EU regulation.
Yeah.
It gives them a clearer runway.
Sure.
So yeah, they're not just reacting, they're actively shaping their strategies around market demand and, importantly, regulatory landscapes.
So given all this, the market shifts, RWAs emerging, institutions getting more involved, what's really shaping the long-term picture here? Our sources keep pointing to regulation and institutional news as the big drivers. The SEC in the US reviewing those spot Ethereum ETF applications. Decision expected this month. That feels huge, doesn't it? But is there a risk that too much regulation could, stifle innovation? Especially for the smaller projects.
That's always the balancing act, isn't it? It's a valid concern. An Ether ETF approval, yeah, that could be a massive catalyst. Just like the Bitcoin ones were. Brings legitimacy, easier access for traditional money.
Right.
As for stifling innovation, well, regulation always adds compliance burdens, sure. But clear frameworks, like MiCA in Europe, they're actually designed to build trust and encourage responsible growth. Not necessarily to kill innovation. For many serious players, having clear rules is actually welcome. It gives them a solid foundation to build on.
And the institutional side. Are the big banks really getting in now beyond just like pilot programs and experiments?
It seems like it's moving beyond just experiments, yeah. Our sources mention several major banks, particularly in Asia and Europe, announcing pilot programs for blockchain-based settlement systems. That's not just dabbling, that's looking at integrating this tech at a core foundational level in their operations. Broadly speaking, it signals a growing mainstream acceptance, moving crypto tech from just speculative assets towards being part of the actual financial plumbing.
Okay, so let's wrap this up then. The overall market sentiment for July sounds like a real mix. Short-term caution, definitely, because of recent price drops, macro uncertainty still lingering. But that longer-term optimism, it's still there, especially for Bitcoin and those altcoins with clear uses.
That seems to be the case. Investors are definitely watching those macro factors closely. Inflation, interest rates, and regulatory news, institutional flows. Everyone's looking for the next big catalyst. As July goes on, yeah, the community is really watching for anything that could spark, some renewed bullish momentum.
So there you have it, a deep dive into the crypto market outlook for July 2025. From those surprisingly bullish Bitcoin predictions and Ethereum's growing utility to the rise of real-world assets and those crucial regulatory decisions coming up. There's clearly a lot happening beneath the surface.
Yeah, we've seen how that volatility is sitting alongside this underlying optimism, and how the key developments in tech and regulation are really shaping what's coming next.
It really highlights that, while the market jumps around day to day, these foundational shifts, institutional adoption, clearer rules, they seem to be setting the stage for some significant long-term changes. It's not just about today's price.
Absolutely. And maybe here's something to think about. With RWAs gaining traction and regulators providing more clarity, how quickly could crypto shift? Shift from being seen mainly as speculative, to becoming a much more integrated, maybe even indispensable part of the global financial system in the next few years.
Definitely something to ponder as you navigate this space. Thanks for joining us for this deep dive.